the dollar. We've got two charts. The dollar is down 10.5% in the last 6 months. It's one of the weaker 6-month periods, coming off a strong 6-month period, we should note. But the next chart, I think, is more significant. Obviously, we mentioned earlier, zoom out and the decline in purchasing power is sort of silly, as you eloquently mentioned, Cullen. But they are selling dollars. So the dollar has had the second worst start to a year, down 10.5%. And you're seeing other assets catch a bid, gold, Bitcoin. Are people selling the dollar and buying gold because they are worried about all of the things that we've been talking about? I mean, that sounds reasonable.
I think there's certainly an element of that in play. I mean, coming out of COVID, I think we saw that the government was willing to be reckless enough that it, I think, probably hurt the credibility of the currency a little bit. The bigger impact here is, I mean, this really started at, when the sort of macro regime changed, when the tariff stuff started, and the whole goal of the tariff policy and the US first policy is to become more isolationist. And that's in a relative sense. And so currencies are a relative play. And so on a relative basis, we've seen that a lot of, especially foreign assets and non-US dollar denominated assets, become more attractive because the US economy becomes a little more isolationist on a relative perspective. And in a weird way, it's sort of positioned a lot of foreign economies as stronger, whereas part of the reason the dollar was rallying so much over the last 15 years on a relative basis is because we were just beating the pants off of everybody in economic terms during that whole period. And so a lot of what we've done with the tariff stuff has made us less competitive on a global stage. It's yet to be seen whether it makes us better off on a more nationalistic stage, but on a global stage, the US economy has certainly become less competitive in the last 6 months. And that's been, I think, part of the goal of the policy approach here. And so the currency market just reflects that reduction in competitiveness that we're now seeing play out.
So in summation, dollars are not meant for hoarding. They are meant to be productive, even if that is in short-term T-bills, short-term cash equivalents.
I'm a big advocate of the T-bill and chill strategy. They're the best cash management strategy. Screw high yield savings accounts, screw CDs. Banks are ripping you off. Go straight to the government, buy those T-bills.
T-bill and chill.